You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back once again for the bi-weekly options extravaganza known far and wide as the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-compelling network upon which so many of you are binging these days. If you want a little more binging in your life, stay tuned. After TWIFO, just hit next on your device of choice. Or after TWIFO, after the Option Block, we will have TWIFO coming up shortly after this with the once and future Dr. Bix and break down all the vol on the commodity screens. Probably talk a little equity vol out there as well. He is Dr. Bix after all, so stay tuned for that. All you pro folks hanging out can listen to this right after the show. All you folks on demand will get it when it hits the network later on today. Of course, if you want to join the pro fun, get in there. I know we have some folks in the pro chat who beam in from Florida, so hope all of our listeners out there in those areas are hunkering down, staying safe. I actually have some family who was pretty much directly in the path where it landed. So it's kind of a bit of a nerve-wracking night. They had no power. We lost contact with them very early on yesterday. So all there was really was watching videos of just the whole coast being destroyed down there and houses being inundated. Finally got a chance to get through to them this morning. They are doing all right. Not much damage. So thankfully they were lucky. They were about, I'd say, 30 miles or so north of where it really came ashore and with devastating force there in Fort Myers. But still, they were in a mandatory evacuation zone. So yes, crazy times. Moral of the story, they tell you to get out, listeners. Don't hunker down during a storm. So hopefully all you folks are doing well, including all of our pro folks out there from beaming in from Florida. If you want to join that pro fun, see how things are cooking over there, theoptionsinsider.com/pro is the place to go to learn more. And let's see what's going on and who's joining us here on the show today. First, let's go out to a quiet, a sleepy, a tranquil hamlet where I think I'm fairly safe to say they've never had a hurricane. It is St. Charles, where we are joined once again by the uncleist of Mike, St. Charles, Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the show. How does it feel to never have had a hurricane in St. Charles, sir?
About the same as it does to feel the same way about never having a hurricane in Chicago, I would suppose. So not too bad.
There you go. Not too bad. Now we go east, pretty far east, listeners, all the way to the dark and stormy shore. So, already stormy is in the title. So, they are potentially poised for a few hurricanes up there on the shores of Maine. Now, luckily, it's pretty far north. They don't usually make it up that far, but we did just see a hurricane hit Canada. So crazy things are afoot these days, where we are joined once again by the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, welcome back to the show. And are you folks bracing for potentially down the road this Ian to make it your way, sir? Is it projected to go up the main road?
I
don't think so. You know what? I don't even think we get hurricanes. We get nor'easters. I think like the most since I've lived here, the winds get up 60, 65 miles an hour, maybe. So, but they accompany with snow. So it can be like a crazy storm, but it's not the massive, just heck, the wrath of God storm that they're getting in Florida right now.
Yeah, usually by the time they get that far up the Atlantic, they've broken up, they've hit land a few times, they petered out. They are a bit of a nor'easter. You're right. Growing up in Connecticut, we really only had one direct hit with a hurricane. That was Gloria back in the 80s that I can recall. So outside of that, not really big hurricane zone, thankfully. So hopefully this one will break up. They're saying it's going to bounce back out into the Atlantic, which is never good, always supercharges it a bit. So hopefully all you folks down in the southern regions, we just talked to Mr. Overby yesterday live. He's in the path of this thing. So he's preparing for a hit, probably mostly rain, hopefully for him in a few days out there. So hopefully if you're in that area, you're staying safe. Just hang out inside. We'll keep you educated, informed, maybe slightly entertained as we dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. And the hurricane isn't the only thing that is just wreaking havoc out there. The markets are just wreaking havoc with themselves today. Everything just looking red out there, of course. So coming into the start of the show, we are seeing the S&P, after a nice rally yesterday. I was talking with Brian yesterday. I was kind of calling it a bit of a dead cat bounce, and now we are back down below, actually, the level where we posted our question of the week on Monday. That was at a 36.60. We are now at about a 36.30, off nearly 90 handles on the day, or about 2.4%. We got as low, looks like it's about 36.23 before we bounced after the first sell-off, then rallied about 30 handles, a little more than that, up to about 36.53 and change. So had a nice little run there, now coming back down the other side of that. The Dow off close to 2%, about 1.85%. NASDAQ leading the charge yet again, off about 3.25%, almost 3.3%, 364 handles to the dark side for the NASDAQ. So yet another day of downside here, listeners, in the market. Interestingly enough, our vol friends, already starting from a pretty frothy position, are looking pretty much unched. Except for VVIX, they're looking pretty much unched from where we were this time on Monday's show. VIX is almost literally unched. When we kicked off the show, we were at a 31.90. That puts it down a whopping 1/10 of a point. We were at a 32 on Monday's show. So there we go. A lot of evolution out there in VIX land. We got as high earlier this morning as about 33 1/3 before things turned around a little bit. In terms of VVIX, that is still looking frothy. That's at about a 110. That's up a little over 4, about 4.25 points from where it was on Monday's show. So now we're getting back into those pandemic areas of VVIX where we hung out for 2+ years. So this is looking a little bit more normal, at least from what we were expecting coming into the start of this year and what we had for pretty much since March of 2020. So interesting stuff. These last couple of months where we've been below triple digits have felt kind of odd. So now we're back in a somewhat more pandemic normal type of range. VXX 2080 up about 2/3 of a point right now. VXX, they're starting to issue units, I guess. So I guess we have to start paying attention to this thing again. It's kind of been a bit of a just, there's VXX doing whatever the hell it wants to do. Everything else in the market in the vol space is up 5 points and VXX is down 3 because why not? These days, it's actually doing kind of what it's supposed to do. So perhaps we'll have to start paying attention to it again. UVXY 1260 up about 1/4 of a point. SVIX, our inverse friend, down a whopping 0.2 of a point, hanging out at about 1040. UVIX 1360 up about 1/3 of a point. And VolQ, the NASDAQ vol, at about 35.5, up about exactly a point from where we were on Monday's show. So a little bit of evolution, but mostly hanging out pretty close to where we were on Monday's show. Let's go back around the horn the opposite of the way we came. Let's start out in the land of the rock lobster. While he's battening down the hatches for the potential approach of Ian, Mr. Rock Lobster, sir, what are you keeping an eye on in an interesting day in the market, sir?
Well, I think we have, and I'm interested to hear Mike's take on this. So, the Fed raising rates because clearly there is, and I think a lot of our inflation troubles are generated by central governments, G7 governments, Democrats, or whatever. They're spending money like drunken sailors, right? So the Fed steps up and says, wait a minute, we were wrong. We got to put an end to this. Under And in 2022, clearly the U.S. administration spending money like a drunken sailor still, not quite understanding this inflation thing, apparently. Europeans, not quite understanding this inflation thing. Bank of England, not understanding this inflation thing. Hard to believe. Okay, we're going to go now buy bonds again while we're raising rates. And, and normally I would say a tax cut, I don't think is a bad idea. I guess it's better to have a kind of a supply side stimulus than to spend more money. But again, timing probably not great in an inflationary environment. So you got that on door number one. Door number two is what I would call the destructive green energy policy in Europe. Like the Germans have no energy. They had a policy that was dependent on cheap gas from Russia, and somehow they cut their nose off. Now they have no energy, and it's driving, like they have a 10%, their inflation number was off the charts because literally there's no energy, you can't have a modern economy with no energy at all. Apparently, whoever's running Germany doesn't know that. So they're and they're still dawdling about putting, nuclear back online, coal, but so it's madness. The English, same thing. They try to, they got rid of their fossil fuels, no more nuclear power. None of that. Now all of a sudden they're in an energy squeeze. Not as bad as the Germans, but very similar. Again, these are all self-created. It's not the U.S., thankfully, until recently, was energy independent, which insulated us somewhat from this problem. But the last 2 years, we have lost that. So again, green energy policies, not quite understanding if there is no energy, this could lead to catastrophic economic results, which we are now seeing today. So the Fed is making their effort to, because basically nobody wants to borrow anymore at 0%. Now all of a sudden you look around like, hey, I'd rather buy a government bond for 4.5% than nothing. And, now we're in this, I think the markets are in this sort of, dislocative area where, hey, interest rates are going up. We kind of blew it. It's going to cost a lot more money to borrow. Our money's going to be more expensive. And we're now going through this process, which I would argue we should have done 10 years ago and stopped prevaricating over it. But hey, Fed stop printing money. Let's just let the economy suck for a while and let the pricing mechanism start to generate some prices. And I'm hoping, now the Bank of England, I think, kind of screwed up. We had that temporary rally yesterday, but ultimately they're going to have to find a price where people are going to want to buy those bonds. And we'll see how, I guess, this is the short answer is how far the central banks can go now. I think they're running out. Their ammunition is now done. The markets are going to do what they're going to do. And they really can't be on the bond buying program anymore. I think they're just going to cause more problems. Now, I could be totally wrong, and they keep trying to fix it by doing what they've done before, only making things worse. And that's where I think the volatility is coming from right now. So I think there was some sort of inclination like it was transitory. And I think everybody can look and see energy prices are causing tons of these problems with the massive government spending, all the dollars that have been thrown around. Now, those are two policy things that can be fixed, yet we're not addressing them. So till they're addressed, I think we're still going to have inflation, although it might not be as bad as it was. But I don't see how it's going down. Nobody with a grocery bill is seeing it going down. Although some parts are starting to soften up because, higher rates are taking effect. But I think what we're now is, I believe we're trying to get out of this central bank enabling process. And for the financial markets, especially for stocks, that could be a painful process. You're looking at a lot of companies in the S&P 500. I'll just take Intel. It's like at a 6-7 year low, right? And they're supposed to be getting a ton of money to build fabs. So there is, basically nobody cares. They're getting rid of stocks. They might be moving into safer assets that pay higher interest rates. And we're back to basically 2008 interest rates, which probably is where they should have been in the first place. There was no reason for them to be as low as they were. And we now have to deleverage. And it's going to be painful. And that's what I think.
Tell us how you really think, sir. But those folks over there in England, yeah, maybe they might want to crack an Econ 101 textbook. Some of the stuff that's coming out of the Parliament and the Bank of England over there makes you kind of just scratch your head saying, do they not realize what type of environment we are in right now? But I digress. Let us keep on rolling out to the land of Uncle Mike. You know, listeners, it's always refreshing on a day when the S&P is down over 2%, NASDAQ down over 3%, red everywhere on the screen. It's always refreshing to check in with our permeable in residence, Mr. Uncle Mike. Mr. Uncle Mike, sir, what is lighting up your tape on a decidedly not Uncle Mike type of day?
We're all going to die.
Oh, wait. I'm sorry.
Hold on. I thought my mute button was still on.
I forgot to hang up with you. I'm sorry. That is not Uncle Mike that I just dialed to.
I thought my mute button was still on. I'm sorry. I screwed that up. So, no, I mean, on today, when we are, again, retesting or coming to the area of where we were in mid-June, the 36 level. I mean, we went below it, but we're in the low 3600s. So we're kind of testing that level again. And so I guess just one of the things that I think, what happened this summer that was really good that made us rally like we did? So in other words, in the start of the year, the market goes down, it comes up, it goes down. It keeps making lower highs and lower lows. And we had the low point in mid-June. Then we channeled for a while, but then we had this rally starting in mid-July, peaked out in mid-August. And then we're kind of back to where we were in mid-June again. What happened in mid-July that sent the market up as much as it did, almost 15% in that time frame? Why did we go up so rapidly high during that time? And I can't figure out what sent us up besides either short covering or a bear market rally or something along those lines. Now, once again, I want to reemphasize that over the long term, I'm still the same bull that I've always been. The stocks do go up in the long term, and 100% of the time when we've had pullbacks, the stock market does come back. When is the key word, of course. But right now, the fact that we've had such a ridiculous rally from the COVID lows, I mean, we got to take our medicine in some way, shape, or form. This has just been a harsh, cruel fact of life for all markets since markets have existed. Now, of the things that are happening right now, are we printing money like it's going out of style? Yeah, no doubt about it. And at some stage, when you just literally give people money like we did during COVID, inflation's going to hit at some stage. And so I don't think it's transitory. It obviously was not transitory, but a lot of times things get better before people think they're going to get better. Now, I think the next level down in the S&P, we have to be careful of, because I think the next thing that I'm looking at is we're going to the 3,300s if we continue to go lower. Now, granted, we've held 3,600 this week. We'll see if we can continue to hold it, and we might not even hold it for the rest of the show. Who knows? But I think that right now we're at a spot to where if you have the stomach for it and you want to buy the dip, then now could be a dip to buy. We were at 4,800 earlier in the year. That was the all-time highs we were at in January. Now we're at the 3,600 level. We're roughly 25% down. Stock market's lost 1/4 of its value since January. And it's ironic that any other sale that exists on the planet, if it's a sale at Walmart, a sale at the local hardware store or whatever, people run to it. Stock market, though, people run from it. So if you're a longer term investor, I would have no problem putting new money into the stock market for the long term right now. None whatsoever, because if it goes down, then it has lesser of a spot to go back until it goes to its all-time highs. However, if you are a short-term trader and you're concerned over the course of the next year or so, then I think there's a lot of reason to be concerned. I've always said on this show, I'm long-term bullish, short-term cautious. In the short term, I am very cautious right now. The fact that we have the things that Andrew talked about, I think that needs to be really taken seriously. The other thing is that I said on this show earlier this year that I thought that a lot of the reason that bonds went down wasn't necessarily because of interest rates rising. It was because of the fear of interest rates rising. And so bonds bottomed out for a little while. And then the Fed had their last meeting and he said, oh, we think we're going to raise rates even more than we thought originally. And then, of course, bonds went down again. So we have a lot of things like that going on. But when we do get some shed of good news, when we do get some shed of light of good news, when we do get some type of ray of sunshine, I could see us jumping on it, because yesterday we did have a little bit of a temporary rally. Of course, today it's all right back down again. But that's kind of where it's at. And to give people some perspective on the marketplace this week, we started the week off, I believe, at roughly 36.90. We're at 36.30 right now. So we are down less than 2% for the week. So that's kind of good. So that's not a bad thing. So we're looking at that. And the other thing that I think is hurting us right now is the dollar continues to rise. With the dollar rising like it is very hard for markets to grow in a strong dollar environment. And so when we have that working against us, us being the bulls, it's not an easy environment to grow. At some stage, if the dollar starts to pull back, I could see a rally. But until then, I'm very cautious until the 3,300 level. And then at that point, I might be a little bit more optimistic. But for right now, long term, like I said, no qualms about going all in, whatever, like I've always been. Short term, though, I'm very cautious at this point in time. And that's where I'm at.
3,300. That's Uncle Mike's level to start BTFD. And what's your level? We have that question of the week. We'll get to your answers a little bit later in the show, listeners. First, let's go around the rest of the market, see what's lighting up our tapes out there today. You might think, given the explosive down nature we've had in the market today and a little bit of whipsaw action, that it might be a pretty explosive day for VIX. And we're doing some paper, don't get me wrong, but also it's not the threatening 1 million contract day you might be expecting if we just saw this apropos of nothing else. You know, the fact that we've been selling off for a little while now, even though this is a little bit more extreme sell-off, people are a little bit inured to it by now. They're not quite. You slap them in the face a few times, you slap them again, it's not quite as shocking. And so 350,000 contracts on the tape, that's not nothing. That's certainly pretty much what the ADV was about a week ago. These days, that ADV is looking a lot more robust. It's up almost 90,000 contracts since our last show on Monday. The ADV now is over 500,000, 527,000 contracts in VIX. So remember, it just broke 400K in the wrong direction not too long ago. So it's back up, looking pretty frothy. It's up 87,000 contracts from Monday's show. So VIX is putting up some paper. Good chance it's going to hit that ADV today, if not exceed it out there. So interesting stuff out there. SPY putting up some numbers today. 5.71 million contracts already. And that ADV was around 6 million not too long ago. Now it's almost 8.7 million out there. So SPY putting up some numbers. SPY, a hurricane of volume in and of itself, and continuing to generate numbers out here. The S looking pretty robust itself. Almost 1.75 million contracts on the tape for the S right now. 1.74 million. That is a hell of a lot of paper for the S. And also the ADV, 2.74 million. So exactly a million away from its ADV. That ADV is also just incredibly high for the S, but shows you what kind of paper we're seeing out there these days. Speaking of incredibly high ADVs, small caps, at least IWM, 651,000 contracts on the tape right now. That ADV continuing to surge up. It's up about another 70 or 80,000 contracts since our last show. It's threatening a million contracts now, 947,000 contracts. So small caps, once again, on fire. Let's go see where our friends, the small caps, are hanging out right now. Off about almost 3%, about 2.9% right now. Of course, if you want more small caps, come back in about exactly an hour. If you're a pro or if you're on demand, of course, just wait until it hits the network. We'll be back with, like I said, the once and future Dr. Vix, talking all things small caps and everything else going on in the world of futures options. On the Qs front, 1.63 million contracts, the ADV, a little bit shy of 3 million, about 2.93 million. So a lot of action on the index front. Let's see if this is one of those days where everyone's so focused on the macro, they kind of forget about the micro. And I guess the answer is kind of. It's not the most robust day, but it's not nothing either. It's 193,000 contracts. That's what it cost you to break into the top 10 today. So not a ton of paper. That gets us to our old friend agency. How many times have we talked about this one in the past? Quite a few times. It has never made our top 10 most actives before. So that is kind of an interesting departure. They're trading 862 right now for agency, off about half a buck or 5.25%. My goodness, they're coming for agency. Let's just see what is lighting it up out there today. There's 100,000 of the March 13 calls have gone up today, and 50,000 of the March 11. So what is this? Is that a 1x2? Let's look really quickly. Yeah, it looks like that was a spread. That was a 1x2. And looks like they're opening on the 11s, opening on both legs. Interesting. A 1x2 going up in agency. Someone doing a little bit of aggressive March stock repair? Intriguing. You know what? Perhaps maybe we'll see if we can talk about that a little bit later. We shall see as we keep on rolling out here. Agency number 10, 193,000 contracts. Number 9, Google, a.k.a. Alphabet, 195,000 contracts. So not a heck of a lot of paper there for Google. Number 8, our old friend Ford, 232,000 contracts. They're coming for Ford today, off 6% or about $0.75, hanging out right around $11.44. So coming for Ford today, listeners. Number 7, the artist formerly known as Facebook, now Meta. 137.30 right now, off about 4.30 or about 3%. Hearing all these rumors that Zuckerberg is renting out the Apex Performance Center for the UFC fights this week. It's only him is going to watch the fights. But weird stuff afoot out there in Zuckerberg. And maybe they're doing some weird meta promotion. I don't know. But all sorts of weird stuff. Not enough to save them today. Off, again, almost $4.50 or a little over 3% today. Number 6, NVDA. The chip folks out there. 310,000 contracts on the tape. 120.75 off nearly 7 handles. 6.6 handles are over 5%. So they are coming for NVIDIA today. This is pretty much the 52-week low here. They hit it this morning, 120.35. So NVIDIA looking pretty rough. Let's see. Back in November, they were $346.50. So pretty much a third of what it was back in November, listeners. My goodness. And we've got Netflix, number 5 here, listeners. Netflix, number 5, 339,000 contracts for number 5. Netflix off 6.75 or about 2.75%, hanging out about $238.50. They're not quite at their 52-week low. Let's see. When did that 52-week low come? I'm guessing it came after that horrific announcement back earlier this year. Yeah, that's when it came. It hit it in May. May 11th was when they hit their 52-week low. So not quite there. 162.75. They're 238.17. So they're well north of their 52-week low, but they are coming for Netflix today. Number 4, back to the chips. It's AMD. AMD, 401,000 contracts. That's pretty much a normal day for AMD. It's usually hanging out around this level and around this level of volume as well. So interesting day for AMD, even though they are off 460 or nearly 6.75%, trading 63.75. They are also at their 52-week low. Pretty much hit it this morning, listeners. Actually, they're through it now. They're at a new low as we speak. So intriguing stuff for AMD. They were also trading 164.5. That was back in November. That was their high for the year. It's 63.75 right now for AMD. Number 3, it's the Amazonians out there. Listen, they managed to buck the trend the last few times. Can they manage to do it again? Probably not. And the answer is no. Off nearly $4 or 3.25% today, trading a little bit north of 114, about 114.20. They are north of their 52-week low. That was 101.25. That came, looks like, back in June. So then that big June sellout, they hit their low. So they are about $12, $13 actually north of their 52-week low, but they're coming for it today. Number 2. Yes, I said number 2. They're finally coming for this name today, which is interesting. This one has been very resilient as well. This is Apple. Apple, look at the chasm between 3 and 2 here as well. Amazon, 497,000 contracts to number 3. Number 2, Apple, 1.57 million contracts because they are coming for it. It is off 5% today, or 760, trading 142.25 right now, listeners. My goodness, when's the last time you saw Apple off 5% intraday? It's been quite some time. This one has, throughout all the sell-off, it remained pretty resilient. It got down to its low earlier in the year of 129.04, so obviously we have a little room to go down there. But can Apple retest those lows? Can it get lower? I know the Meatball was on the show on Monday saying he thinks Apple can test 100 again. That's been his level for a while out there. Are you on board with that? You down with that, listeners? Nearly 1.6 million contracts changing hands today. So some folks are obviously on board with what's going on out there, or scared to death about what's going on out there in Apple. And rounding out our list yet again, number one spot again. It has really kicked Apple to a number two spot. Even closing in on 1.6 million contracts, not enough for the top spot. That is Tesla. Almost 1.7 million contracts on the tape for Tesla. 268.5, down about 19 and a quarter right now, or 6.7%. They are coming for this one today as well. They are well north of their 52-week low as well. That was 206.86. They hit that back in May, actually, interestingly enough. So not quite there today, listeners, 268.5. So intriguing stuff. We are seeing some earnings this week. Cracker Barrel earlier this week, Bed Bath & Beyond today, Rite Aid today, CarMax, Micron, and Nike today. Carnival tomorrow. We do have hot off the presses for your education and entertainment and enjoyment. We have an earnings move result reports from our friend over there. I heard rumors Matt's in town this week. May have to see if I can hook up with that guy. We'll see. But CarMax popping off before the bell today. 86.40 is where they were trading going into their announcement. They're pricing in 7.6%. Get this, listeners. They're trading down 22.3%. Oh, my goodness. They are coming for CarMax. Right now, it is still off 23.5%. So I said it went into its announcements, 86.40. It's $66 right now. $20. My goodness, they have come for this thing. Wow. CarMax. I guess the bubble for used cars is finally over, listeners. My goodness. Wow. $20 for CarMax. Yeah, you had Napa this morning as well. They were yesterday after the bell, I should say. They were pricing in 6.1%. They went out into their announcement $14.81, and they delivered 13.4% out there. So intriguing stuff for them. A lot of those reports you can check out for yourselves. We have upcoming after the bell today, Micron. $51 even is where they were when we ran this report this morning. They're pricing in $294. In the past, they've moved $268. They probably moved that much already today, listeners. Let's see. Micron, they're off 2.3%, so about $1.17. So not quite that much, but a nice little move out there. Nike today after the bell as well. Almost $100. 98.70 is where they were when we ran these numbers. They're pricing in pretty much exactly $7. In the past, they've moved $6.33. And Nike off right now, 3.7%, hanging out at $95. So it's down almost $4 from when we ran this report this morning. So it's already moved quite a bit, listeners. And a lot of interesting stuff to keep an eye on. So there are still some earnings to keep an eye on. You can check all that out for yourselves, theoptionsinsider.com. Looks like there is one new earnings trade to keep an eye on this week. Matt and his team adding a long calendar in Micron when the stock was right around $50, $49.88. Looks like they picked up the October expiring on the 14th 50 calendar. And this is a long-term calendar. They went out to June. This is a June 55, October 50 calendar. Wow, that's interesting. That's interesting construction. I'll have to dig into that a little bit more. And it's diagonal as well. So intriguing stuff. You want to check that out for yourselves. Our earnings trades report there for your information and education, all for free, theoptioninsider.com. We got to keep on rolling. It is time to unleash the eye of Sauron. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we get weird, we get wild, we get whimsical. Mr. Rock Lobster, I'm going to throw you a curveball because I'm calling an audible right now. I'm bumping agency onto the list. We didn't have it on our rundown, but let's get into agency. This has been a hot one of late, and this trade is certainly intriguing. We've talked about agency many times on the show, listeners, including not that long ago. We hit on it just recently here. Let me pull up our last bit of discussion here about agency. Yeah, it was from Monday's show. I thought we talked about it on Monday's show. And at the time, we talked about some call action out there, which seemed like it was kind of interesting. Also kind of bucking the trend. We saw someone coming in, scooping 20,002 of the DS11s for 16 cents. Seemed like an odd trade. The stock was $9.91. It was doubly odd because if you've listened to our pro shows, Options Oddities, we've been talking about fading agency for quite some time. There's been a ton of put paper, including someone loading up on 25,000 of the OCT12 puts the last time we talked about them, when the stock was $12.50. They paid 40 cents. That worked out pretty well. The stock's much lower now. But even the Meatball said they've seen it on their big money flow. A lot of fades coming in for agency, which makes this print kind of interesting. Let's get into it a little bit. Right now, agency 862, like I said, off almost half a buck today, or 5.25%. So they are coming for agency. A year ago, it was nearly $16, $15.97. Got up to as high as 16.75. That was on October 22nd, looks like. And it's pretty much been mostly straight down ever since, with a pretty precipitous drop over the last 10 days. This recent sell-off really just coming for agency. They went from 11.30 on the 19th all the way down to 8.60 right now. So they're coming for it. And we talked about a ton of puts, except for Monday. We talked about someone buying some calls. Wonder how those DS11s are looking right now. The stock off another half a buck today. Not that good, listeners. But today, Mr. Rock Lobster, intriguing. We got the talked about it earlier, the March 11, 13, 1x2 going up. It looks like they may have bought the 11s for 23 cents, and then because they realized maybe it's crazy town to buy some calls in agency right now, they decided to sell 2 of the 13s against it. So they sold those for 9 cents. All this kind of went up funky, so they could have done it the other way. If they did, that would be certainly interesting, because then you're prepping for a big upside explosion. And, of course, it could be someone maybe trying to cover some shorts out there. There are a ton of shorts in agency right now, so trying to protect themselves against an explosive move to the upside. If you're selling one buying to 11.13, you're prepping for a big move to the upside, listeners. I think it went up the other way, but I'd be curious to hear the Rock Lobster's thoughts. Also, this is opening on both legs, and the vol here is about a 45 on both legs. So interesting stuff. Mr. Rock Lobster, we talked about agency on oddities a number of times. I know you guys have talked about it in the flow. It's mostly buying puts. Until this week, we got in call action. What are your thoughts here, sir?
You know what? I'm looking at this, so I don't see how this 1x2 is not buying one, selling two. Because you know from the price action, that's 18 over 23, which is what, a nickel? So
yeah.
And 13 is the high of the stock when rates were lower. So I mean, this is just, so all this put buying we now know, of course, was because who wants to own a security like this when rates are going up and you can just buy a 10-year treasury for 4%, right? Why would you buy one of these stocks, that are paying what? They used to pay 3.5%. I guess now the yields are higher. But even I guess the yield is up to 5% on this one now. So to compensate for the risk, this stock is in Palookaville. So all those, how many of these, like Chimera and Ares Capital, there's so many of these like levered mortgage-backed security company, they're doing all this kind of interest rate flim-flammery. I still don't get how they do it. But that is above my pay grade, which I readily admit. But at this point, I also saw 10,000 of the DS10s going up today, and that to me looked like buying as well, which I was a little surprised.
Yeah, it was the DS11s on Monday, so now they're just, why not roll down another strike and do the 10s too?
And I think again, this is all speculation, but with my rant at the beginning, if there's some policy change, if there's some tacit admission that some of these policies aren't working and we might try stuff that does work to sort of drive prices down, you could see that this year could be the peak, even though the Fed has been pretty clear. As long as they're seeing rates the way they are, they're going to keep raising, like a la Volcker, right? So this to me is a straight up bet that is not going to happen. Now the difference is this customer is using margin and not risk dollars. So, I really think that for this thing to go to $15 would be some kind of a short squeeze. And I don't think the stock it does not appear to be, let's see, 46 cents. So, and there's a divvy coming out. So, yeah, so it doesn't appear to be heavily shorted, as in speculatively shorted at this point. So it does look like some like good old fashioned call buying, possibly. Okay, this customer is, they're looking for a turnaround in rates, or at least, not going up anymore or not so steeply. That, again, like I said on here many times, I think was totally necessary to wake everybody up. So, but this person's looking, I think, for rates to plateau here in the short term on this one.
This is the second big chunk of call paper we're seeing out there, listeners. So this is interesting. This could be, again, I'm with you. I think it's got to be buy one, sell two. In which case, it's kind of like a funky stock repair almost. Listeners, obviously, they're probably sitting on a whole bunch of underlying as well. So this is the old school stock repair. If it goes up, they won't be that sad about this. And they got a nice little 1x2 spread here to help them out along the way. Intriguing stuff here for agency. So yeah, does this mean the end of the bearish trend in agency? Are folks worried about an upside turn? Are they just so crazy short they got to put on something to keep the risk managers happy to the upside? Either way, listeners, what are your thoughts on it? This thing has been an intriguing one to watch. This is our new charge point. We shall see. Speaking of intriguing ones to watch, I haven't checked in on this one in a little while because it's gone pretty much straight down. We're going back to our old friend Vroom Inc. Ticker symbol Vroom, VRM, trading a whopping $1.19 right now. It's off about 12 cents or 9.2% today. So they're coming for Vroom today. On the year, this is disgusting. It's off 21.63 or 95%. I mean, we've talked about this name before. I think it's mostly been on the oddities on the pro side where we've talked about Vroom. It's been one of these names where I think when it got down to $2.50 back earlier this year, it was intriguing for a lot of our listeners in terms of there was a lot of juice. They were paying a lot of juice for those 2.5 puts. It turned out that juice was warranted because it spent a lot of time below that 2.5 level. It got down to as low as $1.03 back in May. It seemed like it's going to maybe test that low again today. It's got as low as 116 before it stopped the bleeding today. So they're flirting once again with their 52-week low, right around $1. Mr. Rock Lobster hasn't stopped someone from coming in and just mortgaging the future in Vroom. They're just blasting away. They're saying, give me that money now. They came in and sold 20,000 of the Jan, not 2023. The hell with that. Pshaw. Not 2024, because who wants to sell 20? That's not far enough. Jan 2025, 2 calls. So they're giving up multiple years worth of upside in this name. Now they got some juice for that. They got 70 cents. So the stock's $1.20. They got 70 cents. So that's a fair chunk of change. If you're wondering, it's a 146 vol, by the way. Yes, there are many earnings between now and Jan 2025. The next one is on November 8th. It's still, this kind of trade does make me chuckle, though, Mr. Rock Lobster. Because at the end of the day, then, I guess you don't mind getting out at 270. It's not a bad percentage return, but you're holding this crappy little stock. It was just $20 not too long ago. You'd hope if you're still holding it, you want some sort of retracement. And they're apparently willing to get out at 270. And any time in the next 3 years. What are your thoughts on this one, Mr. Rock Lobster?
I have to say, I guess if you're, you buy the stock here and you sell those calls, the return on capital for that amount of time is pretty good, right? You're looking at, 70% return, something like that, 50, 60% return.
My thoughts on going out 2 years and 3 months with a short premium, though. Not my favorite.
Yeah, I know. I think somebody just saw that and said, "Wow, this looks like an easy do." I think it's probably just sell the, where are the two? The Jan 25, the 2 puts are $1 bid. Sell those. Sell them for $1.10. So there's definitely that the 2 put is $1 bid, 80 cent bid over. So, or I'm sorry, 20 cent bid over to parity. So anyway, I think that's if that's how you're making money in this market, I guess it could work out, but you're just, you're giving away, you're locking up everything for all that upside.
Yeah.
If there's any upside potential,
it's all gone. Why are you holding this thing?
It's a head scratcher.
Yeah. I mean, I get it. You're downside now. You're down to 50 cents on the dark side. So that's not bad. I get the appeal of making it all one package, set it and forget it, but I also hate it at the very same time because it's like, why are you even doing it? If
the floor trader in you just throws up in your mouth.
If the viceroy was here, first off, he'd be like, why are you trading options on a $1 stock? And secondly, why are you even holding this thing if you're going to give away all your future for 70 cents now? I mean, I don't know. It just, at this point, just get rid of it.
I just feel sorry for the people that paid $50 for it in 2021.
Ugh.
$50. Like that is some pretty awesome wealth destruction there.
Oh yeah. Got up to 65 on August 28th of 2020. so it's $65.
In July of 2020. $75.
And now someone's giving away 2+ years for 70 cents. This is what we're doing.
Not had, let's see, ever since it's gone public, it has not had it just hemorrhages money like crazy. And some listener, I think a listener on Twitter, he was upset that I didn't understand the Dash business model, and all this kind of stuff.
I saw you're making friends on Twitter this week.
Yes. And it's not that I didn't get it, that it's kind of a gig business model. It's just that I haven't seen those models make money yet. Like, how long has Uber been in business and they still don't turn a profit? I'm just seeing what I'm seeing, and I guess Dash is similar, right? So now I guess that time will change where they actually start making money. But again, I guess it's possible. It's just not my favorite business model because I think it's easy to do the same thing basically.
You're poking the cloud bear now. They're going to come for you again. You know that now. So he's going to. What are you talking about? So this, and I don't understand this. This room thing is. I did a punt on this when all that flow was coming in, and I bought some calls, and they are going to go out worthless. Total crap. You should have sold the Jan 2025s for 70 cents.
Yeah.
That was your mistake.
Well, the stock was like $2, I think, and just total. Yeah, everything is just gone. This is clearly a company that is going to, or has gone to zero. I mean, where do you go from $1?
Yeah.
Where do you go from $1.20? It's done.
Apparently, you go to 270 and then you're done. That's it.
So it's worth less than, apparently, according to the data on LiveVol. It's worth less than the cash on hand.
You gotta love that. The diehard fundamentalist in you must love. You should buy some of this. Buy some for $1 now. Throw it in. Throw it into the pit.
That's the thing. It's like supposedly it has revenue, yet it just loses tons of money. So I don't. It's a very odd confluence here for Vroom. So actually, a friend of mine is kind of in this space, so I got to ask him about it.
There you go. I just find that trade deeply cynical, selling a 2+ year call on the $1 stock. It's like, why are you doing it? Why are you going to, why were you even doing this? Why are you even in it? Just to move on at that point. But intriguing stuff. Listeners, what do you think? Maybe you like that approach. You like that set it and forget it. Percentage wise, it's the decent return. It's just so deeply cynical to any long-term prospects for this name that you're clearly still holding. Because you're not writing these calls naked. If you are, then come talk to me. I need to help you. But yeah, crazy stuff. We got more here we can talk about, puts in ABR and stuff. But we got to get on rolling a little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
Our chat's saying the car dealership companies are getting destroyed today, and Vroom is a dealership on an app. How can it not make money? Yeah, I think there's a few names out there that they're coming for in that. Look at CarMax we were just talking about as well. They're coming for all of them today. You are correct. Really quickly, let's pay off some of our questions of the week. Our question last week, we asked you guys, it seemed like, given your feedback on shows like Options Bootcamp, maybe we're in a bit of a hashtag Iron Condor renaissance. Do you guys agree? We gave you 4 choices. Yes, I'm trading iron condors. No, I prefer iron flies. No, I prefer butterflies, or they never went away. And nearly half, 45.8% of you said, yes, we are in an iron condor renaissance. In fact, I'm trading them right now. So there you go. Number 2 was no, I prefer the old fly, 33.3%. So pretty much exactly a third. Then we've got number 3, that never went away. So how dare we say iron condors aren't hot anymore? They've always been hot, 12.5%. And 8.3% of you saying, no, I prefer iron flies out there. This week's question of the week. an interesting one given what's going on right now. We asked you back in June about your levels you're willing to buy into this market. Over 40% of you said that you wanted to wait until the S&P dropped below 3750 before you started BTFDing. Now we want to revisit that, see how you folks are feeling now that we're at these newer levels. When we posted this earlier this week, we were at 3660. We're obviously lower than that now because I haven't checked in the last 5 minutes. Maybe we rallied 100 points in the S&P. Who knows? But so we gave you 3 choices. Are you buying back here, or are you waiting for lower levels? So 3 choices. Yes, I'm back in. Or no, I'm waiting for lower levels. Or I never got out. Uncle Mike, sir, what are your thoughts in terms of, first off, I know you're a big Iron Condor fan. So are you feeling that we're in an Iron Condor assance again? Are you agreeing with our audience from last week? And then this week, what do you think our audience is voting for, sir?
Well, I think in terms of the Iron Condors, we could be in an Iron Condor assance, but compared to how it was back in 06, 07, no way. The fact that people aren't yelling at me that I'm dumb not to buy it, be in an Iron Condor right now, we're nowhere. We're not there right now. So could they be coming back a little bit? Yeah, that's fine. And just because we have a lot of higher volatility, we could be getting more juice for them. I can see that. But in terms of where we were in 06, 07, no way. In terms of buying the dip, long term, I never got out, nor will I get out until clients need to take distributions and we realign their needs. But I never did get out. I'm a long term believer in this market. Short term, though, in terms of where the market's at right now, where we're going, I would say I would start to become pretty bullish at the 3,300 level, around in the 3,300s for now. But once we get there, I'd probably be scared. Who knows? But for right now, I think that's the next level with which we need to look at to say, okay, enough's enough. Bulls are coming in.
All right. And Uncle Mike, I have more news for you. We had a hot debate on our Monday show for the option block about the worst wrestling gimmick of all time. So we put it to the ultimate arbiter, the audience. We gave them 3 choices or the infamous other. What is the worst wrestling gimmick of all time? A Repo Man, that was my vote on the show. Mr. Meatball, he put out the Shockmaster. We also gave him the choice of the Red Rooster or other. And Mr. Uncle Mike, with 37.5% of the vote, Repo Man took it, sir. What are your thoughts on that, sir? Repo Man, the worst gimmick of all time.
That would probably be it. I couldn't argue with that one. Maybe the Red Rooster, but I would definitely say Repo Man's top 3. So if Repo Man wins it, God bless him. He should have that honor.
By the way, I did manage to look up after the show what the Meatball was talking about with the introduction of the Shockmaster. I was not familiar with this character at all, and it is worth looking it up just for that. Even WWE has an official clip of what they call the infamous. He just falls through a wall. His head falls off. It's actually pretty fantastic. I'm laughing about it right now. Mr. Rock Lobster has no idea what the hell we're talking about. Well, actually, I'll give him a chance to weigh in before we keep rolling on. Mr. Rock Lobster, what do you think our audience is voting for in our poll this week? Are they saying they're back in now that we're at these lower levels? Are they waiting for lower levels, or did they never get out?
Oh dear, I think our people are waiting for lower levels. That's what I think they're saying. And I'm actually, I have to say, I am myself. I'm still sitting on some bucks. I did buy some in June, and then we started rallying again, and I stopped. And so, yeah, I mean, that's what I'm doing. And I have to say, a lot of this stuff looks interesting. So anyway, I think, I think people are waiting to get in,
Good time to have some bullets, as we used to say, down on the floor. Let's go out to what our audience is up to right now. And you are correct. Waiting for lower levels. 64.9% of you right now. 21.1% saying you're back in. And disturbingly, this number keeps growing. The I never got out. It's now up to 14%. I feel for you folks. If you've been riding all the way down, hopefully listening to this show, some of our other shows, you've armed yourself with a few techniques to at least mitigate some of that pain, so you're not just riding it right back down again. But interesting stuff. Get in there at options. Make your voice heard as we now go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. Welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye on until our next episode on Monday. Let's go back to the world's biggest Shockmaster fan, a.k.a. the uncleist of Mike's. Mr. Uncle Mike, A, did you manage to see that clip of Shockmaster since our last episode? I'm laughing again, just thinking about it. And then B, what are you keeping an eye on until our Monday episode, sir?
I have not seen the Shockmaster as of yet, but now you've inspired me. I will check that out after this show.
Check out our show chat last week. I put it in there for you. You can check it out there. It's pretty funny.
I will for sure. You watching for next week? It's more like now we're at a stage to where what am I watching today? And watching today, see if 3,600 will hold in the S&P and seeing where we're at with that. I think at some stage, representatives need to get reelected, and the Democrats aren't going to want to give up the House. So I think they might do something to make this market rally, and we'll see if they do that or not. But in the meantime, I'm not sure. I don't know what can be done to manipulate the market to go higher right now from the government, but I think if something can be done, that it could be. And in fairness, I would say the same if Republicans needed to become reelected. So we do have midterms coming up, and it'll be interesting to see.
Can you imagine if they pull England and they say we're going to kick out some stimulus again? I think that would send us spiraling south immediately the second they announce that. It would have the opposite of the intended effect. Mr. Rock Lobster, same question for you, sir. What are you keeping an eye on until our Monday show, sir?
Well, we're looking at this PCE deflator number to see what kind of inflation that we have. Is it worse? Is it better? Are we stuck like the Germans with this spiraling energy prices? You know, I have noticed, I think things have, at least here, the prices kind of leveling off somewhat. So a lot more cars in the lots in our used car places in Maine that I drive by, things like that. So I think the policy, I'm looking to see if that number actually kind of slows down a bit tomorrow, which could be a vol killer. Could be a vol killer if it happens, or if the number is really bad. Again, because the Fed's not saying a whole lot for the next 6-8 weeks. We could be ugly city tomorrow if the inflation number is really bad. So just anyway, and I'll just say the market is looking for a fairly large move tomorrow, pricing those near-term straddles in the S&P 500. So folks, just be ready. Be ready is all I can say. Be ready.
Be ready indeed. Good words to live by in these markets, listeners. Unfortunately, that's all the time we have for this episode. Of course, if you want more in your ear holes on the pro side, you folks hang out. We'll be back in a little bit with the once and future Dr. Bix. He'll be live right to you talking all this mad volatility out there. If you're on the on-demand side, wait a little bit. It'll be hitting the network later on today. Let's go back around the horn. Let's start with the always ready Mr. Meatball, or should I say Mr. Rock Lobster, sir. If folks want to reach out to the other Andrew, where should they go? What should they do?
Yeah, Ted or other Andrew, 888-TRADE-01. Anything at Option Pit, you want to learn how to trade 10% off just because you listen to me on this show. You will not find a better deal anywhere if you want to learn how to trade options. So only if you heard it on the show, you had to say, listen, I listen to Option Pit. I have to listen to Longo to listen to Andrew, but in lieu of that, I get 10% off. There you go.
There we go. Our chat saying California is handing out inflation relief checks, so we don't have to go all the way to England for a good laugh. Here we go. We're doing it right here in the U.S. So there we go. More money, because that's not adding fuel to the fire. Intriguing stuff out there. Listeners, let's go back to the uncleist of Mike's, Mr. Uncle Mike, sir. If folks want to consume the growing empire of Uncle Mike content, where should they go? What should they do?
Follow me on Twitter at Mike TOSAW. My voice is gradually coming back, so the videos will be coming back as well starting next week at Mike TOSAW. And if you're looking for a financial advisor who actually uses put options and tries to prepare for markets like this, check out my website, stcharleswealth.com. You can sign up for an appointment with me or reach out to me along those lines, stcharleswealth.com.
Oh, yeah, we had a good question about using puts right now, or is it too late? Maybe we'll try to get to it on Monday's show, because that's an Uncle Mike special right there. Check them out, stcharleswealth.com. optionsinsider.com is the place to go. We got to get on out of here. Pro folks, hang out. You get some fun stuff. We'll be back again in a little bit with TWIFO. For all the rest of you folks on the on-demand side, we'll see you later for TWIFO, tomorrow for volatility views. For all you pro folks, options oddities after that. Then back again on Monday, another episode of The Option Block. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.